we're kicking off this podcast season for 2026. Now that everybody's got back from vacation and all that stuff, and I want to thank our previous season's host, Rocker Van Fossen. He's done an amazing job at Information Banker. He's moved on to bigger and better things, and you can follow him on LinkedIn. But I'm going to take over this time as the host of the LendAPI Podcast, and we got an amazing individual. I come to learn about this person in the past couple of years. We had lunch, dinner. We met at a local fintech meetup in LA. Got to thank those guys as well. And it's been a great pleasure to meet, to know more, and just so happy to have him on. Again, this is going to be a different format. Rocker has 3 questions. I have nothing, so I'm just going to free flow. I invite all the people that I know, so hopefully I can toss some questions to my friends here to get the conversation started. Let's get it going. Mor, good to see you. Happy Chinese New Year. I want to say Happy New Year Alto.
Happy New Year too. I haven't seen you since the New Year.
Yeah, we should get together.
I'm here, Tim, and good to see you.
Yeah, absolutely. Maybe for everybody else in the audience, and there's going to be hundreds of people watching this, tell us a little bit more about you and what you're doing. And then I'd love to dig into your background. You know, we both have an immigrant story. I just love that story from you. Maybe you can share some of that as well with us. But I want to get into the finance stuff in a second. But the mic is all yours, Mor.
Thank you, Tim. Yeah, my name is Mor Milo. I'm the CEO and founder of a company called Relli. I'm a young entrepreneur that's been through trials and tribulations and many startups. This is my 4th startup, and it's been a journey. I am an immigrant. I came to this country when I was 4 months old from Israel, and grew up in this country and moved around quite a bit from New York to Texas to Colorado to Los Angeles, where I now live, which is actually in Irvine, a little further south of Los Angeles. And I'm extremely excited about creating impactful products that help people. And I like finance, so I built a finance company.
Yeah.
And I did it with my amazing business partner, Ross Relli, who is a good friend of mine for the last 10 years and has been along the journey with me through all 4 of my previous startups.
Wow.
And with Relli today. So it's been a blast. And now we're building Relli, which is attempting to become a stock market for real estate platform similar to Fidelity or E-Trade, where you can invest passively in real estate. And we're in our early stages of building. We currently have a product for accredited investors to connect directly with amazing sponsors that have lots of experience in all different asset classes, and it's growing every day.
Yeah. Our audience is super sophisticated, but there's a couple of terms I'm going to push on a little bit, right? Sponsor, accredited investor. Feels like this is a platform you can get everybody together. There are multiple parties that's going to join Relli. Tell me more about what is an accredited investor? What is a sponsor? What is this platform trying to do to create more value for Southern California folks, since it's real estate central, but everybody else under the sun? Tell me more about these terminologies.
Sure, and maybe we can take a step back even a little bit further. Most people aren't familiar with the concept of passive investing in real estate because it's something that hasn't been available to them. Most people know a passive investment in real estate, passive, to be purchasing a single family residence and turning it into an income property. And what me and my business partner wanted to do was get involved in real estate, but we didn't want to have an active hand. We didn't want to be landlords. We didn't want to deal with tenants. I watched my parents build a small portfolio of small family residential homes and deal with leasing out those homes to tenants that treated their property not so well, and they had to do lots of renovations and deal with all sorts of headaches. So what we discovered was that wealthy people in institutions for many years have been investing alongside real estate development companies and deploying their capital to build large properties where those high net worth people and institutions that want to invest their money can do so completely passively and empower an operator, somebody that actually does the day-to-day, to be able to produce a return for them based off of a piece of property that they don't actually manage.
Right.
So the terms that you mentioned, a sponsor, sponsor is an operator of a piece of property that has a investment vehicle for a accredited investor or an investor in general to invest in. An accredited investor is a term that's used by the SEC to describe a higher net worth individual that has $200,000 in income per year individually, $300,000 with a spouse, or $1 million in assets outside of their home residence. And those individuals are able to invest in private syndications and funds like that exist in the real estate market today.
Right.
And our goal is to be able to take that market that currently exists and empower it to offer investment opportunities to average consumers as well.
Got it. Yeah. I mean, 200 grand, 300 grand. I mean, that sounds like just about everybody that lives in Southern California and LA. I guess they haven't changed that definition. And that $1 million asset doesn't include your primary residence, right? It's outside of your house, basically. Yeah, that seems to be a high bar back in the days, but I feel like a lot of people qualifies into that definition today. But Relli itself, do you have sponsors, right? These people are touching the properties, buying these properties, listing, their projects on your platform, and then you help these sponsors to attract these investors? Is that how the main functionality of Relli is?
That's the current main functionality of Relli. Is what we do is fill a gap for real estate sponsors in their marketing department.
Right.
Help them get in front of investors that qualify for their investment opportunities on demand.
Right.
From the moment that they engage with us.
Right. And you're right. Our family have some of these, single family homes, no different than what you talked about earlier. Every day there's something new. My God, the toilet, the garage door, the AC unit, right? I feel like whatever gain that you feel like you're making is all sunk into the property management company and all these repairs, if you will. So, but there's a little bit of equity value, but there's just a lot of headache. I feel like if I can follow, a real estate guru or somebody that has done this for so long and has a consistent return. It's no different than investing in a equity stock, if you will, right? But it has a big backstop to it, which is the property itself, which feels safer. Yeah.
I have a great story.
Okay.
About a real estate investor that's been investing cash in single family homes for the last 20 years.
That's one strategy, right? Yeah.
It's one strategy. And it's a good strategy. It's not a bad strategy. It's an excellent strategy. It requires a lot of cash. The returns are solid, consistent. And we recently had a conversation about his portfolio of about $6 million worth of single family homes that he owns cash. And he came to the table through an investment in debt that we were offering, where he was able to generate a 12% return on his cash every single year.
Pretty good.
Absolutely no work.
Right.
Zero work.
Okay.
His response to me when I described this offering was absolute excitement, because the amount of headache that he's had to deal with to be able to receive a 5 to 8% return on his money from these very active investments,
right,
is not worth the headache when you can just give it to a lender that has deployed over $120 million in just the last 12 months
right,
into debt with
right,
structured operators.
Right.
And you get paid in the mailbox with no heavy lifting.
Right.
And that's a beautiful thing. And that's one avenue that you can go down that actually is probably on the lower risk spectrum, where you can get a consistent return from hard assets based on first position liens to participate, like the bank, in the real estate industry without actually having to have your hands on the asset.
Right.
There's so many more options.
Right. I want to push that a little bit, right? These percentage returns, right? 12%, 10%, nothing is guaranteed in life, right? You got to look at the average, you got to do your own study, right? So whatever percentage we say, it's just historical numbers, right? You got to really, these are, again, a risky investment. So, owning private single family homes feels like I own something, I can touch it, I can feel it. How do I get the same feeling if I just put like this gentleman, $6 million of equity into a a team, almost like investing in a startup. How do I get the same kind of a guarantee, if you will, safety that I actually own something? Is it through an LLC? Do I have a real claim on these properties? Is my money being spread across, 20 different things? How do you give that feeling back to people that have sort of investment experience, but owning that stuff on their own, although there's a tons of headache behind that? Tell me more.
And that's a beautiful segue to go down, because what I think people don't realize is that they have much more control about where their money goes than they feel like they have. Most people feel like if you want to get into real estate, you get into a single family home, that's the only place to go. With passive investments and the experienced operators that exist in the marketplace, you can actually deploy little pieces into different operators in different sectors of the market that have full professional teams, where you still have a piece of that real estate as a business owner and a
Right.
partner, and you don't have to necessarily deal with that pain. And the reason why we're building Relli was because what we really loved about investing, especially in the stock market and cryptocurrencies, was that we had the control to be able to go look at a company, go look at a product and say, we believe this is the future. We believe in these operators. We believe in the people running these companies.
Okay.
And research them at depth, and then create a portfolio where we have diversification across different sectors
Right.
to reduce that risk,
Right.
such that we have multiple operators in the market creating returns for us on a day-to-day basis.
Got it. So it's just like diversifying stocks, right? Basically, you want to put a little bit of your hard-earned money across the board a little bit. Would you go so far as to sort of underwrite a property, or you only sort of check out the operators? I see you're nodding here.
We check out every single deal that comes to the table.
Right.
Every
The
single
property,
deal
the whole situation, you'll do a full write-up or something. Wow.
Absolutely.
I gotta go
We
check.
have a general counsel and a CFO that look at every single deal,
Okay.
and we make underwriting decisions based off of a
Right.
structured
So
methodology to choose who we like and who we don't like.
you're the experienced co-pilot for investors that want to invest in this, right? So
There's obviously no guarantees, but
of course,
what
yeah.
we have is a team, which most people don't have. Most average investors in the marketplace don't have.
That's right.
Professionals that they have hired
Right.
to support them in making sure that they make the right
Yeah.
decisions. And what we offer is an extra layer of vetting for those exemption-based deals.
Right.
And eventually, we're going to start to see some more of these publicly offered deals to average consumers, which have been qualified by the SEC, at which point there'll also be a pretty nice big stamp on some of these deals from a governing body that has
Right.
been empowered by the U.S. government.
I got it. So I run a software company. People ask me all the time, Tim, who gave you the right to write the software to manage whatever LendAPI does? Give me a little bit more your background, your partner's background. I think I met Ross before as well. Who gave you guys the rights, right, to underwrite these sponsors, to even take a look at these properties and give a grading, if you will, right, to give the confidence that these investors need to put a dollar in? Tell me about that experience.
Well, number one, I would say the most important thing that we've learned along the journey is that we don't know what we don't know. And approaching people with more experience than us that can give us insight and feedback on the right decisions to make is the best way for us to move forward. We are finance, marketing, salespeople that have been able to see a massive gap in the market for most real estate development firms, which is in that sales and marketing department. And what we have to offer them is Fortune 500 scalable solutions that we
Right.
can implement in their business. And what we've done is we've brought people around us that have experience and track record working with companies like CBRE, working for big developers or mid-market developers,
Right.
underwriting deals on a day-to-day basis. People that are specifically focused on SEC securities law and corporate law and real estate law, where we have a support system around us. And the audacity to build Relli really came from a problem that we faced internally, where we said we wanted to have access to the real estate market, but we wanted to do it in little chunks, and we wanted to do it in ways where we could piggyback off of the experience of great operators
Right.
and generate those returns just like we do in the stock market. And I think that passion for creating something that levels the playing field for the little guy has given us the audacity to go out and find a problem and take on a huge, massive problem in a very large industry. And I think our humility has allowed us to bring people around us that know more than us to keep us.
Okay, so the team has some experience. You have access to a lot of a whole knowledge network. Hey, we don't understand this market, don't understand this type of property. Could you take a look at it for us to give our audience the confidence? Okay, got it. So, we'll do some real talk, right? Towards the end, we got to do some real talk. If a deal goes south, sometimes it does. Not to say that deals on Relli have gone south, right? Just based on experience. How much control do you have? Does the investment teams, investors have to? Sometimes you may have to swap in a new sponsor, right? New management team. Something's not going right. What are some of the things that you've seen in the market? Again, not to say that it's happening on your platform, just out there. Things go south all the time. What are some of the things that people can expect that a platform like you or somebody, right, can influence that? Hey, look, sponsor, you got to do a better job, or if you can't do a better job, there's some things in there we can do to sort of bring in help. Give us some of these stories on things that may have fallen apart previously. Again, just in the overall sort of world of real estate investing. What happened?
Sure. So first of all, there have been deals that we've turned down that we look at them and we say, okay, look, guys,
you won't even list them.
We won't list them, no.
Okay.
And that's, look, we're a young company, and there's obviously risk in real estate. There's risk in investments, and we need to do our absolute best to vet these deals to the best possible caliber that we can to make sure that the high quality product is on our platform. We have yet to have a negative experience with a deal going south on the platform. Quite the contrary, all of our operators have been very successful in the last couple months,
Okay.
in the last couple of years, and actually some of them have been audited for the last 10 years. So we feel rather confident with the decisions that we're making around sponsors. And just like the stock market, companies go under.
Yeah.
Deals go sideways.
Yeah.
That's part of the game, no matter which way you slice it.
Mm-hmm.
What we're doing is attempting to find only operators that have a 10-year plus track record in a specific niche,
right,
that have a provable experience in delivering returns to investors.
Right.
And what we're doing in addition to that is notifying our customers exactly what the risks are by listing those PPMs and showing all the risks, by giving additional disclaimers and producing content that makes sure that people understand that anything that you invest in has risk.
Right.
Just like on Kalshi or on Polymarket or on
Right.
any other platform, crypto, choose your crypto exchange.
Right.
There's going to be risk.
Right.
What we believe through our experience working with these sponsors and watching investments go the right way, and also some of them not being appropriate for our platform,
right,
is that there is a lower risk profile for the deals that exist in this market, in this sector, than a large percentage of other markets that exist for investors on a day-to-day basis. And although there is inherent risk, although there's never a guarantee, we have responsibility to ensure that we only have high quality sponsors with great track records.
Right. So you do a lot of job to filter that from the very beginning, 10-year tracker, audit. I don't know what kind of audit there are, probably financial audits, right? All that independent audit. And you mentioned a key word. We're all about demystifying these PPMs. Explain, and then I want to touch upon, you mentioned niche, anything that's hot and popular right now that we should know about. But break down that term for me, that acronym.
So PPM is a private placement memorandum. And a private placement memorandum is a very long document.
Okay.
Not very sexy. It's not very fun, but it's an incredibly important component in every single deal.
Okay.
No matter where you invest in a private investment, ask for the PPM, ask for all the documentation, read through everything. The goal of a PPM is to describe the offering, describe its structure, describe its risk.
Got it.
And if you don't read through that PPM and you don't understand the value of understanding it, then you need to reassess the way that you look at your investments in general. And
Right.
I feel that's a whole different conversation that we can have.
Yeah. So
Trendiness in how people like to invest
that's
in
right.
general. But that document is absolutely crucial for any investor to deploy their capital, to absolutely read it, every single word.
Right. Just because millions of people qualifies into the so-called accredited investor kind of a label, they also need to equip themselves with some knowledge, right? It's different than single family homes. You work with a realtor, you get a management home. There's one toilet, two beds. These things are bigger opportunities. I'm assuming these are commercial real estates and maybe some multi-unit sort of family apartments and things like that. Maybe doctor's offices and malls and things like that. So things could, the way to collect rent and seek out tenants is probably completely different than what a single family home investor are used to. Good. So where can people access these PPM documents? They have to sort of get qualified, log into the platform, and start browsing deals.
That's exactly right. So every single one of the deals on our platform will have their PPM listed. And after creating an account and verifying your accredited status, you'll be able to access all that data.
Right.
And those documents are downloadable.
Right.
And
it's free to log in, free account. They just go and browse
totally free.
once they
Completely
get
free to
qualified.
investors.
Right.
Correct. Completely free to investors. And to go back on your comment for accredited investors to look at, I think retail investors should start looking at these in terms as well. I think that the average consumer is now starting to participate in more alternative investments than they have ever before. And there are many people that are deploying their capital into cryptocurrencies they don't understand, into systems that they don't understand, into businesses they don't understand. And I think that investing is a sport that you need to learn, and you need to go and really understand the financials and understand how pro forma works, and look at companies and compare them side by side to other companies within their industry. And that's what we're trying to do for the real estate world with Relli, which is why we have deals from medical office, single family residence funds, debt, multifamily, self-storage. We're kind of all over the place from the perspective of different types of inventory. And the niche component that you mentioned is incredibly important, because any operator that's raising capital should really understand the specific sector of real estate that they're investing in. If they are a sponsor for self-storage, they should continue to build self-storage. We want to see them continue to be successful with self-storage until they scale to an institutional level where they can then diversify. But where you start to get a little, tripped up with different people that are raising capital, is newer sponsors that are opportunistic and trying to pick different asset classes that they might not understand. So we always look for operators that are raising capital for assets that they've done business
over and again
in that sector over and over again. Exactly right.
So something simple like self-storage, I see them all over the place off the freeways, and I'm learning how to invest in this kind of a a model. Do I need to cough up $1 million, or can I just test the water and say I'm going to pledge $2,000, $3,000, $4,000 just to see what it feels like, see how this platform works? What are some of the requirements and qualifications? I know there's qualifications for accreditation of the investor class, but can I put in $1 just to be part of that mix? But God knows people waste a lot of money on Cal sheets of the world. You know what I'm saying?
We're not at $1 yet. We're
okay.
Way down. We're trying to get down to $100, which we're very excited to get to.
Wow.
Currently, our lowest investment opportunity is $25,000.
So
it's reasonable for most people, but we really want to get in front of everybody. Right. And there are a couple deals that we're working right now that should all go the right direction in the next 2 to 3 months. We'll have deals with as little as $1,000 investment for anybody, non-accredited or accredited investors, to participate in debt funds.
Right.
So I'm not going to say too much more because I haven't closed deals with them and I don't want to talk about that.
No
But
problem. Next episode.
great, yes, next
Right.
episode.
Okay.
But what I will comment on is that the market is shifting. There are a lot more sponsors that have normally only raised capital from accredited investors that are now shifting their focus towards what's called a Regulation A offering,
Yep.
which gives an opportunity for them to raise capital from non-accredited investors.
Right. Yeah.
So anybody can participate.
Yes. These Reg A's and Reg A plus funds I've seen popping up are, like a legacy from the Jobs Act, right, back in the Obama days. And as part of that, I think he was trying to unlock that, hey, these wealthier people have access to these, beefier, sort of higher quality real estate. The common man should have access as well. So you mentioned, retail investors should look at this as well. Can they actually log into Relli today and look at some of these deals, although they can't really invest until you set up a Reg A fund?
That's correct.
The sequence?
As of right now, what we're able to do is collect their information and keep them posted for the first
Got it.
Regulation A
Yep,
fund.
waiting list. Yep.
We're hoping that there'll be one sooner than later. We have a couple in the hopper that look solid, two of them specifically, both
Right.
one in debt, one in industrial. So very soon, our early stage company will be elevating its game and offering retail investors opportunities.
Right. It doesn't unlock another, 50, 70 million investors, right? That wants just to pop in a couple $1,000s into a Reg A plus fund, just be part of the conversation that owns a hotel or whatever it might be. That's super interesting. Oh, well, one last thing. Rates are coming down a little bit. I mean, is that a distraction to the platform, or do you think it adds to it? I think the rate has fallen below 5% as of right now. So what's happening? What are you thinking about that right now?
Rates dropping helps everybody. Is it organic? Is it the right move? That's a different story.
Yeah. Well,
For us, we want our sponsors to win. So anytime that a deal can pencil better for an investor, that's a good thing.
sure.
If debt improves, deals will pencil better.
Yeah.
Good thing.
Yeah.
And if debt doesn't improve, then debt funds are also very attractive. And debt investments are also very attractive because now they start to get into that 8, 9, 10, 11, 12 category where they can start to compete with equity positions that have a higher risk profile.
That's right.
What we're
Yeah.
also seeing with the institutions, that they're shifting their energy from some of the more traditional equity investments that they make
Yeah.
to preferred equity positions, to debt positions, to first position liens.
Yeah. The equity, which is from the crowd, accredited or otherwise, there's probably a little bit of mezz, and then there's the debt. Anytime there's slightly cheaper money, there's opportunity to buy a bigger thing or refinance them out from a previous kind of engagement. The other thing that's hitting the news is that all of these commercial real estates, San Francisco's of the world, have fallen dramatically. I've also seen that graffiti building in LA has a new buyer now. So what did all that add up to, in your opinion, Mor? Give us a crystal ball read.
You're going to make me have a crystal ball?
I'm going to give you one today. Yeah. It seems like there's a lot of activities, right? There's a lot of deals to be had. That's what I'm reading.
26 already has a different energy to it than 25 did. And people are very active. I've talked to so many sponsors that are underwriting literally thousands of deals. They've underwritten thousands of deals. And they're looking for their next opportunity. And I think what's going to start happening is that sellers are going to start selling. And they're going to come off of some of those larger valuations that they're looking for their property.
Right.
In order to offload and move on to the next opportunity.
Exactly. Right.
So at some point that dam is going to break.
That's right.
Might not be pretty, but it will break.
Yeah, it has to, right? It's just a cyclical thing. But although this cycle has gone too long and a little weird, we have the midterms coming along. We have a new Fed chair being installed. All sort of things could happen. But Mor, thank you so much for being on this podcast. I just want to talk about you and your business. I love your energy. And this is another friend of mine in Los Angeles. How do people find you? What's your website? How do people log in?
Super easy to check us out. Relli.co, Relli.co. You
Perfect.
can create an account. You can check us out on all socials at Invest with Relli. You can also check me out personally at on LinkedIn. That's my favorite of all the platforms. Mor Milo is my first name Mor, last name Milo.
Yo.
And honored to be on here, Tim. Thank you for the time.
Yeah. I'll have all this stuff in the episode notes. Do a social blast when this episode is processed. I'm so happy to have you be my first guest on this new season, 2026.
It's really
Thank
an
you so
honor.
much.
Appreciate it, Tim.